What we think is going on right now on a short-term basis, silver just crossed some numbers today that look pretty good, that indicate to us they might get to a really key level. And for silver, our really key level is just a ballpark at around $24.50. We're trading $23.60 right now. You close the week out around 24.5, and we think silver's ready to launch. And it will join what gold said in November when it went through some key levels and has remained above them basically since then. Silver will join in, and I think when that occurs, it's at that point that the miners in particular will flower, okay? Will start to perform well.
Right.
So anyway, we're getting close, I think.
Yeah, so I know you needed to see silver confirm the move in gold, and it didn't happen the first time. So this is a very...
It stopped a penny and a half short of our number.
Well, it's looking very strong. I mean, the last I looked, it was up some 50 cents today. So silver's having a great day. What about the miners, Michael, with just about 30 seconds left here?
Okay, the real key thing on the miners is, one, if silver does cross our numbers, again, ballpark at around 24.5 on a weekly close, the miners will likely then engage. They're laggards. They're like a slingshot. They go real low when you go down, and then they flip-flop, and they're extremely powerful on the upside. What we're watching on the miners right now is a very interesting spread relationship between the GDX ETF and the S&P 500. And it looks to us like that spread relationship, meaning the relative performance of miners versus the broad stock market, is bottoming. And it won't take a lot in terms of a good weekly close on that spread for us to declare, okay, the spread is shifted, miners are now going to outperform the S&P again. The last time we had such a signal based on momentum was about about 1 month after that March low in 2020. Remember when they bagged the gold miners? And they flipped up sharply. The spread broke out, and not only did the spread perform well, it beat the S&P for the next 4 or 5 months, dramatically, but net price of GDX exploded. We think we're in a similar situation now. We're not at the numbers yet, but it wouldn't take a heck of a lot of relative performance shift favoring the miners to then outperform the S&P going forward, which could be a combination of two things. One, S&P decline, and also gold miners going up, which is our suspicion of how it'll turn out. But we're very close to that point right now. I know there's a lot of fundamental metrics that argue what you just said, but the U.S. market is definitely overvalued by this metric or that metric, and I agree. From a technical perspective, especially measuring the long-term momentum of the market, we've described it as the biggest bubble ever in U.S. stock market history. And big bubbles break, okay, period, exclamation point. We think the Fed, which created the bubble, will also break the bubble, and they're probably on course to do that since June, when they started talking about tapering and now rate increases. And so their favorite markets that they supported and outright bought over the last year and a half, up to summer of this year anyway, like muni bond futures, muni bond ETFs, high yield corporate debt ETFs. They literally bought these things outright to support them. And now they've ceased, and these markets are now taking out the lows of the last year and a half, the muni bonds, for example, whereas the S&P is just coming off its high. We think that the stock market, what we primarily focus on, aside from a few key stocks, Microsoft, Amazon, and Apple, we think as those three go, the world goes, okay? But we also look at the S&P 500 and NASDAQ 100, and they're fracturing certain levels. We won't put up the full red light yet, but they're definitely dancing on top of glass, and it looks like they're ready to go through it. We don't think there's going to be a crash-like event like we had in early 2020, where we dropped 35% in 3 weeks, and our definition of a crash is about that. That's what happened in 29. That's what happened in 87. It was of the 35% dimension in weeks. What we're looking for is a major top signaled, and we have our numbers very specific, and they're not far below. And if they're triggered, we think we'll have the onset probably of a first drop being of the dimension of, maybe 20%. And it's an idiot number, because so many people believe in that issue of, if it's more than 20%, it's a bear market. It's so silly. I don't know where they come up with that number. But anyway, it happens to be that we think that the first bounce point is about 20% below here. Now, if that occurred, of course, extreme doubt would sweep the markets. A lot of asset managers who've been very doubtful, like Ray Dalios of the world and so forth, will say, I told you. Okay, and a lot of the younger asset managers who were, all glib and happy will suddenly get some sense of reality.
Before we continue, help us clicking that YouTube like button and subscribe now to our channel. This shows the algorithm that you valued this information. And it helps us spread that message. Sharing is caring. And now, let's continue.
I have bad news for you. If you're not rich by now, you're screwed. And if you're in debt, you're even double screwed. How so, you might wonder? Well, the sad truth is that you're working your whole life to make someone else rich. The mega corporations, the banks, the politicians, everyone is getting richer. They get your money. And what is even worse, they get your time, they get your life. You are not even in a rat race. You're in a financial prison. But what could a solution for you look like? Honestly, I don't know, but I know what a solution for me would look like. It's very simple. I use whatever money I have and I multiply it with 1,000. This could make my life much easier and probably yours as well. If you have $1,000 available and multiply this with 1,000, I believe that this could solve some financial issue for the one or the other. Of course, if you're ugly, you would have to multiply it with much more than 1,000. My name is Marco Stan, and this is what I decided to do. I decided to 1000x my money. This is not a joke. I know what you may be thinking. What is this guy talking about? How should this work? This is not possible. Well, I made a detailed video where I laid out my plan. And some clever folks might even want to look at this plan and copy it and do exactly what I do. This is just a little hint on the side. You have two options. You leave, you forget what you have seen. You do whatever you're doing and you hope that somehow you get some other results. Good luck with that. Or you click the link below the video. You enter your email address because I'm not showing this to everybody. You at least watch my video on how I plan to 1000x my money. The choice is yours. Make the right choice. Join me. See what a different future you could have. See at least how I plan to do the 1000x. So click on the link below, enter your email address, and I see you on the other side. Your Marco Stan.